Dave Reeves, Managing Director, Calidus Resources. Calidus is developing the Warrawoona Gold project in the Pilbara of Western Australia. Stage 1 is targeted to produce 90,000 ounces per annum. And then once we've bedded that down, stage 2 will take that to around 130,000 ounces per annum. Last week we started commissioning of the plant, so not far to first gold pour, so pretty exciting time for the company.
Dave, good to see you. Very exciting times indeed. I'm seeing you since September. Your share price has been on a bit of a rip at the moment, from 56 to 82. Not too shabby in this environment. So was that the re-rate? Have we seen the re-rate, or is there more to come?
Oh, absolutely more to come. You can look at it in many ways, but if you look at Capricorn Metals, it's down here recently, has gone into production. From where we are now to where they are, they're about a year ahead of us. They're probably up another 100% from there. And that's assuming things go well, and we're quietly confident about all of that. But all of the broker coverages, etc., have quite a lot higher target prices than where we are at the moment.
Okay, so let's look at it. You commissioned, right? So what's this ramp-up period look like? Because people go, oh, you're pouring, so money's going to be pouring in. It's easy breezy for you guys now. What's the reality? First pour through to nameplate. What's that look like?
Yeah, so firstly, commissioning is quite a long and involved process. We have got to turn on all the power, test all of that, make sure it's safe. Then we start bumping motors. Are they wired the right direction so they pump one way, not the other? Then we introduce water and make sure we check for all leaks. So once we introduce chemicals, they don't spray over the place. So it's a very sequential process, and we've allowed up to 8 weeks for that commissioning period. That's without any ore. So it's all dry commissioning and wet commissioning, and ore is only introduced sometime before the end of 8 weeks. Once that's introduced, it's generally about 2 weeks to your first gold. And with these plants, once you've got ore going in, it's a pretty simple plant in many ways. So we would expect by the end of the June quarter to be, well and truly at nameplate capacity.
Okay, so relatively quickly, and a nice gold environment to be going into as well. I suppose no complaints from you about gold price. Is it worth maybe just taking a look at some of the images from that?
Sure, Matt. Let's take a look at what's going on. This is actually almost 2 weeks old now. Our drone pilot's off-site at the moment, so we'll be getting a refresh in the coming week. And some of the things that have changed, this raw water pond is now full. Our bore fields are commissioned. We've got all of our 9 megawatts installed and powered up in the power station behind it. And this switch room behind it's live. And then we'll move through into water services. We've got reagents, all of CIL tanks where the gold's dissolved. That's pretty well complete, and all the steel, all the ancillary buildings are good. I'll just stop it there briefly. With our announcement last week on commissioning, we talked about the VSD, the variable speed drive. It's the most complicated piece of equipment we've got. It's a thing that turns the mill, and we can turn it up and turn it down. So we've actually had that running and turning now, so that's pretty exciting, and that's normally something which you might need a bit of time to correct if there's issues, but that's gone seamlessly, and all the mill structure with gravity gold cyclones, etc. Line silos up. All of this is now complete. This is a transfer station and ROM bin. All of this is now complete. Pretty well ready to take ore. We've got to put on conveyor belts, but we now have to work through that electrical, mechanical, little by little, work our way through all these parts, so we can actually be tipping ore in the not too distant future. I'll just leap ahead. ROM pad's starting to fill up with ore. We want about 200,000 tonnes of ore on the pad when we turn on the mill. We've got just over 100,000 at the moment. And one of our social media tweets during the week, we've got some of the trucks rolling in now, the bigger trucks and the bigger diggers. I'll just stop that there. Do you want me to bring that up, Matt?
Yeah, if you don't mind. I mean, who doesn't love big boys' toys?
Okay, can you see a truck?
Yes, sir. Look at that. How many tonnes is that?
Yeah, so the plant's looking good, but we've got the bigger kit coming in now. We've had these little 40-tonne articulated trucks at the top of the mountain. As the mountain's getting levelled, we're now bringing in the bigger kit. Those were 100-ton trucks. There's a 200-ton bigger, needs a couple of trucks to pull it in. It's that heavy, so that's all on site, getting assembled. And in the next week, they'll be firing on all cylinders in anger in the pit. So really starting to ramp up the mining side as well.
Okay, so again, just for people who are perhaps coming new to this, remember, we talked about 90,000 ounces, stage one, 130,000 ounces, stage two. Just remind us of the economics from the study, if you don't mind.
Yeah, so all-in sustaining costs around Australian 1,300 an ounce, and today gold is 26.50 an ounce. Look, hand on heart, we'll see a bit of cost increase. Diesel and explosives and labour have gone up remarkably in the last 6 months, so the 1,300 was a bankable number. You're seeing 5 to 15% increase in costs probably in that time. So, it's still a healthy margin of over $1,000 Aussie an ounce.
Well, that was where I was going. I was trying to work out what that number is, because we've seen people slowing down their feasibility studies because they don't literally want to make announcements. They're not running on the margins that you guys are because costs have gone up. So you're saying 5 to 15% seems to be a reasonable estimate. Do you think is that sustainable? Or do you think it'll come back off?
Yeah, that's the operating costs, and I think some of those will drop. A lot of that's diesel and fertiliser prices that goes into explosives. And I do think, as the world normalises a little, you'll see that come back a bit. Certainly on the capital side, we timed it by the skin of our teeth. The cost pressures at the moment are horrendous. We're upgrading the airport locally. That price in a year's gone up 30%. So if you're looking at developing a project, certainly in Australia at the moment, it's massive cost escalation. And people just don't want to quote because they're unsure about obtaining supplies, they're unsure about timing of delivery, they're unsure about labour to execute. So they're putting a lot of risk factor in.
Yeah, I think some of the more marginal projects will delay things until they kind of can maybe present a better narrative into the market. But for you guys, so on track, on time so far, no money issues in terms of because you've already sort of dealt with the cost. You've got fixed pricing in there, so you don't expect it to go up too much more where you can manage that. But there are going to be things like fuel where perhaps ongoing you aren't able to kind of fix those prices in. Is that the picture?
No, I wish we could control the world fuel price, but it's slightly out of our control. So look, we are commissioning. So our capital's pretty well done. So our focus is turning to operating. We've got maybe 5 to 10% of the capex left to spend. So we're really talking operating now, and our main costs are labour and fuel.
Right. And in this environment, with the expectation, it's always been historic that, in economic environments like we're seeing globally at the moment, gold prices will rise. Therefore, do you bother to hedge on the gold price, or do you, leave it to the market?
So we, as part of our financing, we borrowed 110 million. We have hedged. So we've hedged 145,000 ounces over the next 3 years. At just under 2,400 Aussie an ounce, so still a very good price. And we needed to do that to keep dilution down to maximise value for shareholders. That's enough hedge for us at the moment. We will continue to look at it as we go into operations, but for the moment, it's all about commissioning, gold bars, bedding it down, making sure it all's working as it says on the box, and go that next step later on.
Okay, do what you say what you do. Look, come back on. We want to see that first pour. I think that's what people get really, really excited about. And that's if, as you say, that could be a re-rate scenario for you. We'd definitely love to hear from you. But I want to talk about something else. Right? You've just announced that you are no longer just a gold company. We're going into lithium as well. Why are you doing that?
Just opportunistic value for shareholders. We're in the right geological environment. The Pilbara of WA is one of the major exporters of lithium in the world. And we looked at our tenements. We looked at some other tenements in the area. We said, look, by ourselves, we've got some interesting tenements. But with another company we've done transactions with before, we can combine into something that's got real critical mass. We've put together just over 1,000 square kilometres of really good lithium tenure in the East Pilbara, and it really hasn't been looked at that much. And a lot of these old lithium mines are around old tantalum mines from the 1900s. And this one area in particular that we've announced today, Spear Hill, has really seen no lithium exploration, but it was an old tin tantalum area. Lithium it's obviously a forward-facing metal. Everyone's excited about it. Its price is through the roof. And to sit there and not do anything when we thought there's a very good chance of finding lithium out there would seem a bit lazy and missed an opportunity. So here we are. We've gone into lithium. Gold is still our focus. Warrawoona is still our focus, but we think we can add potentially a lot of value through the lithium side.
Right. So what's the similarities between gold exploration and lithium exploration?
Boots on ground. So it's all in the same area. We've got the infrastructure in place. The stuff we've found, it's outcropping. It's not through any amazing geophysics. It's people out there, boots on ground, walking, having a look, mapping, looking at the rocks, seeing what's going on. So, to have that infrastructure in place, to have the knowledge, to know people in the area, it's very helpful for us. And that's why I think one of the reasons we've been so successful. I mean, we only put this new lithium venture together a couple of months ago, and here we go. We found something over a kilometre in length already. I mean, that's just sensational effort from the team.
Right. So let's be clear about what. So you've got 50% of this joint venture, and you've said our focus is the gold. So you're not going to get distracted. In terms of capital allocation, people allocation, is that going to be a distraction for you?
No. So we'll form a separate team that company will have as its own for geologists. It won't be our gold geologists. Our focus on the lithium. From a capital allocation, it's small at the moment. We're spending 10 million a month on the mine site in operating costs. We're talking a budget for the first year for both parties of maybe 5 million for the lithium. So, it really is a minor amount, especially compared to the cash flow we're putting out. But we feel that minor amount could turn into a very large value enhancer for shareholders.
Right. And again, in terms of how you play that going forward, it's a joint venture. So does this joint venture is it sitting in a separate operating company at the moment or not? Or does it get spun out into a separate public company? I mean, how do you intend to play this?
Yeah, so we've actually put our lithium rights and some tenements and the other companies put their lithium rights into a new company. So it's already in a new company, owned 50-50. And we've done that so that should we desire, it's very easy to spin that out into a new listing and bring in new shareholders and new capital that way. So it has been structured from day one with a spin out in mind. The age-old question is when. At the moment, if we're producing cash and we can add a lot of value, why would you spin it out at that stage? Why not take it up into a resource, really get some meaningful value behind it and then spin it out into that study stage?
Okay, that's interesting. So I was going to ask, what does it need to look like before you consider that spin out? It sounds like you would be happy to go reasonably quite far down the line within a private entity before you did so. And I guess that's going to be a factor of whatever's going on in the lithium market. Obviously, price is going nuts at the moment, and relevant expertise, because it's difficult. It gets complicated the further you go down the line with lithium in terms of what you're going to end up looking like. So right now, it's just pure play exploration, right?
Pure play exploration. Having said that, I've been involved in lithium part-time, if you like, for over 5 years. So I was chairman of and founded a company called European Metals, which has a big lithium deposit in the Czech Republic. It's a zinvaldite. It's a lithium mica. We're looking, as we've announced, we've got spodumene, which is the conventional lithium here in Australia, but also lepidolite. Now, lepidolite is processed into hydroxide and carbonate already by the Chinese. You've got an Australian company, Lepidico, setting up a pilot plant in the UAE to do that. My experience with lithium mica is through zinvaldite. There's a lot of background in lithium. Lithium is pretty well known to me. So certainly very happy to have it in the stable.
Right. Okay. So we recognise all of those companies. Right. I guess what I'm trying to work out is like, how does the market value a private entity where you don't necessarily need to report what's going on, or they don't need to report what's going on, and how do you guys put a number on that? How do you give guidance as to what that looks like? Because again, it's a sort of grey area, isn't it?
Well, because we've got a substantial shareholding in it, we've got to announce what it's up to. So the market will be fully informed what it's up to, and both parties are, very open to listing. So we would want to publicise what it's up to, so the market can value it. So when we do look to spin it out, there is value in our share price through that asset.
Okay, and your partner in this instance, how are they capitalised? Are they going to be able to kind of keep up with their obligations, financial obligations?
Look, that's a question for them. Haoma Mining, we're on the ASX and our primary markets here. We know the guys very well in there, and we actually bought some tenements off them in the early days of Warrawoona, and have worked together well. And whether they want to fund it further, or whether we take more of the funding on and take a bigger percentage, or we bring in third parties at preferably an obscene valuation. Let's see.
Well, you've kind of answered the question, which is how far are you prepared to go to kind of maintain this? I guess it'd be a factor of what you discover and whether you think there's value there. Well, Dave, fantastic news. So diversifying the risk, and more importantly, working towards that revenue generation on the gold as well. Appreciate the catch up. Stay in touch. Let us know how you get on with all of the above. It should be a good year for you guys.
Very good year, and very exciting 3 to 6 months ahead between first gold ramp up, drilling starting on the lithium, drill results due in from last year's exploration, this year's exploration for gold kicking off. So it's going to be busy, but good busy.